Federal Reserve finally cut interest rates, which should be great news, right? But instead of a huge rally, the market got, well, kind of nervous. So let's break down what's really going on and where the opportunities might be hiding.
Okay, so what's the deal here? On one hand, we got the exact news the market has been begging for. But on the other hand, the reaction was super choppy and uncertain. It just doesn't seem to add up. So what's really happening behind the scenes?
All right, first things first, let's get really clear on what the Fed actually said on September 17th. Because, the devil's in the details, and those details are key to understanding why the market reacted the way it did.
So not only did we get that 25 basis point cut that everyone expected, but the Fed basically telegraphed that more cuts are coming. This wasn't a one-off thing. It was a signal that, hey, we're planning to keep easing things up. And this is exactly the kind of long-term good news the market is supposed to love.
But instead of taking off like a rocket, what did we see? A little pop at first, sure, but then a lot of selling. This is a textbook, classic case of buy the rumor, sell the news. Basically, the market had already anticipated the rate cut for weeks, maybe even months. So when the news actually dropped, all the traders who'd already bought in just said, "Thank you very much," and took their profits.
Now here's where it gets really interesting. This sell the news reaction didn't just happen in a vacuum. The Fed's announcement landed right at the beginning of what is, historically, a really tough time of year for the stock market.
And check this out. This slide shows a massive split right down the middle of the month. If you look at 75 years of data, the first half of September is actually pretty good. But the second half, oof. From September 17th onward, the historical annualized return just plummets into the red, an eye-watering negative 25%. And if you thought that was bad, just wait. Let's zoom in even closer. The single week from September 20th to the 26th is, on average, the second worst performing week of the entire year. We're talking about a staggering annualized loss of over 43%. It's just historically brutal.
So when you put it all together, you've got the sell the news effect, these incredibly strong historical headwinds, plus some market turbulence from options expiring. Well, the market's nervous reaction suddenly starts to make a whole lot of sense. The long-term story looks good, but the next couple of weeks have some serious historical baggage. Okay, so with all that short-term gloom, where's the opportunity?